Good morning and welcome to Business Africa Live on BTA. I'm your host, Benjamin Afre. This morning, we are taking a look at business and economic issues in Ghana and other African countries. We'll take a short break. When we come back, I'll introduce my guests for this morning and we'll take our discussions from there.
Here are some vacancies at Elmina in the Central Region. Electrical or Electronics and Process Engineer. The purpose for this position is to oversee all activities in the Electrical, Electronic Engineering Department, including the strategic planning and implementation of new engineering practices and technologies for effective and efficient use of electricity and machinery to maximize productivity. Your duties and responsibilities will include the following: liaise with ECG on billing and fault issues to ensure good power intake and efficient power usage. Installation of new electrical or electronic equipment and machinery to standard. Planning all electrical maintenance schedules, both breakdown and preventive maintenance, to ensure minimal downtime on extruders, thermoformers, reclaimed shape molding machines, and other production equipment. Programming of AC and DC speed drives, programmable logic controls (PLCs), controllers, and other programmable devices on extruders and thermoformers, and liaise with the production department to ensure smooth and efficient operation of machinery, among others. For the qualifications, a candidate must obtain a bachelor's degree in electrical or electronic engineering with a minimum of 10 years working experience. Candidates for the position must have a good educational background and extensive working experience in the polystyrene and/or polypropylene manufacturing industry. Send a curriculum vitae to eric.assign@ggfcghana.com for consideration. Job title: Mechanical Engineering Maintenance Manager. The main responsibility is to ensure that mechanically production equipment is in good working condition, which should be able to turn out good products. These include the following duties: mechanical troubleshooting on production equipment, extruders, thermoformers, shape molding machines, compressors, and other equipment. Planning maintenance schedules on production equipment. Planning and supervising machine repairs and modification. Installation of new equipment, and the design and fabrication and repairs of all product molds, among others. For the qualification and experience, candidates for the position must have at least City and Guilds Part 2 in mechanical engineering or its equivalent educational background with a minimum of 15 years working experience as a mechanical engineer with a reputable manufacturing company. The person must be comfortable maintaining air compressors, cooling chiller, cooling tower, high-pressure gas pump, low-pressure gas pumps, steam generation, hydraulics and pneumatics, preparing maintenance budgets, and any other mechanical works. Candidates must also be able to manage at least 10 subordinates. Send a CV to eric.assign@ggfcghana.com. eric.assign@ggfcghana.com.
The tourism industry in Ghana is reported to be the fourth highest foreign exchange earner on our GDP list. We will find out what the impact, the identification, development and promotion of tourist sites in the local vicinities where they are located. We also want to talk to the various chiefs and opinion leaders in these communities to assess whether tourism is making a positive or negative impact on the lives of the local people. This is Tourism TV, fact-finding program that seeks to investigate the existing and potential tourist sites. Join me, Ralph Aite, this and every Friday on this wonderful expedition to find out what tourism is all about in Ghana.
Welcome back. We are taking a look at some major economic and business issues in Ghana and the rest of the continent. To do a discussion with me this morning is one of our usual guests, Charles Amwakwata, who is an analyst and also a broker. Welcome, Charles.
Thank you.
And thank you again for being with us this morning. As usual, it's good to see you.
It's good to see you too.
Let's take our first story. The Bank of Ghana is looking at reviewing some of the foreign exchange measures they brought up quite recently. It looks as if the CD's free fall has halted a bit. So they are looking at reviewing one or two of these measures to ensure that they're able to stay in line. What would be your take on this review by the BOG?
I think that it's a good thing to do. Anytime a policy is introduced and you allow it to work for some time, you need to really review to find out how effective it is. And I believe that since these measures were introduced by Bank of Ghana to actually help to manage the depreciation of the cedi against the major currencies, there were a number of protests about it, concerning how abruptly they actually brought out the policy and the fact that there were not enough consultation. And then moreover too, there was also a general application. The question I asked myself is that after about a month or two of its application, what has the authorities seen to necessitate the review or the change? And what I really came out with was that they realized that it's not working in every sector. Okay, there are some areas that are not really yielding the results, and that is why the authorities really said that there are certain areas that they realize that it's not actually yielding the right results. So, yeah, exactly. So, there's the need for a review, so that those areas will be looked at, okay, so that they'll be able to achieve the full impact that they're really expecting. So, the lesson that I really learned from this is that anytime there's a need for any policy to be implemented to deal with the problem, there need to be a wider consultation. And the second thing is that we don't need to do a general application. We need to target to make sure that we get the right results. And if they are coming back to do that, I think the better, for
But it's
Ghana.
interesting that we are using that approach in terms of managing our currency. If you go to Zambia, for example, what they are doing is that they are scrapping two laws that ban the use of the foreign currencies in Zambia. And within a day, the currency, the kwacha, had gained as much as 3.4%. How do you... We seem to be facing the same situation, but it looks as if we are using two different approaches to handle this.
Yeah, I also read about that same story. That Zambia has also been having this kind of currency challenge. Okay, so far their currency, the kwacha, has actually depreciated over 10% against the dollar. Yep. So because of this, they introduced some measures to deal with the problem. But interestingly, they realized that the measures are not really working. Some of these measures are the measures that Ghana also introduced. They actually banned the use of dollars and the foreign currency in Zambia. And also instructed that companies who want to do international transactions should actually report through the authority so that they will scrutinize it before they do it. Yeah. After some time, they realize it's not working. Okay, so they need to really scrap it. And report indicates that after scrapping it, within a day, it made such a significant gain. And I was asking myself that then, in our case, why are we also doing the opposite?
Exactly.
You understand? Exactly. Yeah. But the lesson, I'm getting from this is that, whenever you want to solve a problem, okay, you have to look at your situation and see how best the solution will fit. The fact that one country uses a particular strategy to deal with the same problem does not mean that if you use the same strategy, it might work. So it means you have to look at the peculiar situation in which your country forces itself in, and then see how best you'll be able to use the strategy to really deal with the problem. So it's not working for them. They've scrapped it. In our case, is it working or not? Per the Bank of Ghana's analysis, before they came out with the policy, the first month of the year, January, the cedi depreciated against the dollar about 7%. Okay, the second month, it actually, it was about 5%. Yep. And so far in March, according to them, they are saying that the depreciation is about 1%. So they are saying that it's really yielding a resource. It's always, the city is although depreciating, but it's depreciating at a lower rate. After they've come out with a policy. So according to them, it is actually yielding a resource. But that notwithstanding, it is not enough. They need to do more to actually deal with the problem.
I have always looked at the situation rather in terms of export-import imbalances. We import so much and export very little. So I see that this problem, in terms of its real resolution, I think, or what I think is that we should look at long-term measures that will deal with this. And one of those long-term measures is to rather push to increase exports, or the opposite way, to reduce imports by import substitution. Some of the things that we can produce here, some of the things that we are even producing here, we should find a way to use more of those things than importing. That is what I've been thinking, that in the long term, that might be the best way to go.
I think you are perfectly right, because this thing has been said over and over again that it is actually a developing country problem. Okay, in most occasions, we have a type of economy which is import dependent. We import everything in our country, okay, and even what we also produce, we don't consume. Okay, so in terms of international trade, developing countries are always at a disadvantage. We don't have a comparative advantage. We are always importing more than we are exporting. So we always have a huge, current account deficit. Yeah. You understand? So there is the need for developing countries like Ghana to think long term, to be able to deal with this big problem. Because if we don't look at it that way, we continue to have this problem. Okay, so as we just said, in the long term, we need to change the structure of our economy. We need to add value to most of the things that we do export, okay, so that we can get a lot of foreign exchange from our export. When we have processed, products, we export processed products. You understand? And then we also try to do import substitution, just as you said. So there are a lot of things that we spend hard currency to import. We will not do that. We will actually produce them here, and then we will be able to consume them. So in the long term, the problem has to do with the restructuring of our economy to be, to actually add more value to what we export, and also try to produce some of the things that we export in the country. And by so doing, be able to deal with this problem. But this kind of central bank's intervention in dealing with the problem is actually temporal. Okay, to deal with the economic imbalances at any short term. But the long-term problem and the permanent solution, we have to really restructure our economy.
Would you also look at the active trading of currencies as a way of also countering this problem? Because then you have an active market, and so price discovery happens not with just about a few people, but in an open and transparent market. I think that also helps. So.
Yeah, I think that is very true. Some believe that if we engage in active trading of the currency, it will help in efficient price discovery. Because most of the time, I even heard some of the authorities in central banks saying that the price discovery we have in the country is not actually, a reflective of what is happening. Because he mentioned only 3 banks as controlling the whole thing, as compared to the other banks. And he said that these 3 banks are determining the price. I see. So to him, he said that it was not actually reflective. So going forward, there should be a way to make it more reflective, to actually reflect what is actually happening on the ground. So maybe we are looking forward to, some of these things, so that it will help to check, some of these issues.
Ghana and Denmark has also signed a double taxation agreement to ensure that you are not taxed in Ghana and taxed in Denmark at the same time for the same things, capital appreciations and all that. What do you make of this agreement that was recently signed?
Actually, when I read about the reports, the question I asked myself is that, is it going to be in the best interest of Ghana? Because normally when this double taxation agreement are signed, the implication is that if you have Denmark citizens in Ghana, and then they earn any revenue, and they also do investment and they make capital gain, they will not pay the tax they are supposed to pay to Ghana government, but they will pay you to Denmark, their home country. In the same way, if you have Ghanaians in Denmark, and then they earn income, and they also invest and they make capital gain, they will not pay tax to the Denmark government, they'll pay it to government. So we need to do the calculation to know the balance, to see that are we going to be at a loss or at a gain. So I don't know whether our authorities have actually sat down to do the calculation to know that the tax that they get from Ghanaians, they will get from Ghanaians in Denmark will be more than what they will lose from Denmark's in Ghana. You understand? So I wouldn't be in a position right now to say whether it is good or not, unless I get figures, to prove that they have done their calculation when they realize that this would be in the best interest of Ghana. But what I realized that, most often we allow these bilateral multinational partners to bring their own proposal. They might have done their calculation. Exactly. Okay, they might have done their calculation. They maybe they know that it's going to benefit them. But what about us? Have you also done our calculation to realize that it's going to be in our interest? You understand? Yeah. So whether it will be good or bad, I think that it will be good only if Ghana is going to benefit from this kind of agreement. But if you are not going to benefit, then I don't think that's that is a good thing.
SIC returns to profitability. One of the biggest insurance companies, if not the biggest in the country, SIC, is now back to profitability. 2012, they recorded losses of as high as 9 million Ghana cedis. But as at the 2013 unaudited accounts, they are doing a positive of 346,000. What could be accounting for this, sudden and huge change in profitability?
Actually, SIC is the biggest insurance company in the country in terms of assets and distribution. Okay, they're almost everywhere in the country. Okay, and their 2013 report shows a significant improvement as compared to the 2012 performance. And when I looked at their reports, I realized that they actually did about 3 or 4 things which has actually helped them to really churn out these results. In 2012, they made, as you said, they made a significant loss of about 9 million Ghana cedis, okay, $4.5 million. And this can be attributed to a number of factors. One, they decided to write off bad debts. Okay, bad debts which has been accumulated as a result of unclaimed premium, okay, which has been there for a number of years. And they also have a huge management expense. Okay, so if you look at these statements, it actually impacted on the performance of the company in 2012. So coming into 2000 and even before 2013, there were the workers' union in SIC were in actually some kind of battle with the management, that they were not really managing the company well. There were high management expense, and that they were approving contracts which were not really appropriate. So in 2013, new management really came on board and decided to do restructuring, okay, to actually write off some of these bad debts, okay, and then also try to also reduce the management costs. So if you look at the 2013 performance, you realize that the management cost reduced actually from about it was about 30 something million.
No, it was
okay.
about 45 million.
Yeah, 45 million to 38 million reduction of the management costs. Yeah. Okay, and the same bad debt that they wrote off in 2013 also reduced, in 2013. Yeah. So this you learn that the cost component, okay, in 2013 performance was lower than 2012. So this actually helped the company to bounce back from the 9 million loss that they made in 2012 to about 350,000 Ghana cedis. So
would you attribute, for example, part of these unclaimed, what do you call it, premiums. Could it be the reason why the National Insurance Commission is now coming up with a policy that it is scrapping this credit, on premium? Could it be one of the reasons? Yeah. Or is it an industry, is it maybe not to SIC alone, but the entire insurance industry is facing similar difficulties?
Yeah, I think it's an industry problem because if you read a report from the director of the NIC, and the NIC, which is the regulator of the insurance industry in Ghana, yeah. I think from time to time they monitor the industry to identify risk factors, okay, which can impact negatively on the industry, and then they deal with it. And I believe that they've done their research, and they've done their research very well, and they've noticed that this credit premium, has led a lot of companies to accumulate unclaimed premium. Okay, and some of them, the nature and how long it has kept in their books really raises concern. Okay, so I think that that actually informed them. Okay, that if you don't really deal with this, okay, looking into the future, it will become a very big problem for the insurance companies in a situation where they will accumulate a lot of unclaimed premiums, and it's a very big risk, because if you actually provide insurance to institutions and company individuals, and then they don't pay you, and there is any reclaim, how are you going to do exactly claims? Because you have actually given them a policy, they have not paid for it,
and yet they are making a claim on you.
You reinsure them, and then at the same time, when there is a claim, how do you also pay them? Okay, so it creates a problem, a liquidity problem, and then a problem of lack of confidence in the industry, in the situation where when people get problem and they come out to claim, insurance, there's delay, and then all those kind of things. So these things, I believe that these are some of the issues that the regulator has actually identified over the years, and they've seen that going forward there is going to be a challenge, so they need to really come up with a policy to deal with this. So I believe that this policy of no premium, no cover, it will be in the best interest of the industry and then policy holders within the country.
If you take a look at SIC, that is back to SIC, you realize that for the past couple of weeks, the prices have been on the ascendancy. Could these, results, the 2013 results, be what is informing this gradual rise in the price on the stock market?
Yes, I believe so, because one thing about the market is that information moves the market. So positive information will actually bring confidence and interest into the market, and negative information will drive people out of the market. And anytime a company embarks on activities such as restructuring, what it means is that they are putting things in order to ensure efficiency, to make sure that the company comes out better. And this is good information. Okay, and this has actually produced results. Since they started the restructuring in 2012, they have released their results in 2013. And we have seen a significant improvement from a loss of 9 million Ghana cedis to a profit of 350,000 Ghana cedis. So this is a positive information. Which investor wouldn't like, this kind of information? So I think that the smart investors have actually discovered that this is the right time to buy SIC, because during in 2012, when they made a loss, the price of SIC came down.
Yes.
Okay, so yeah, exactly. So when we began this year, it was really actually selling at a lower price. Okay, so the smart investors identified the potential in the company, and they've decided to really start buying, accumulating, before the company actually see it biggest glory, so that they can really benefit from the company later on.
UT Bank is seeking to raise 100 million cedis from shareholders. What it's seeking to do is to recapitalize the bank and also to put into some project that they are currently working on. Do you think there is just that, or they are trying to anticipate what the BOG might be doing? Because we know that the BOG, the Bank of Ghana, is looking to increase the minimum capital requirement for banks. Do you think they are doing this in anticipation of that, or purely, as they've said, to do some projects?
I think that it is both, because once you have an indication that your regulator is going to increase your minimum capital requirement, you need to prepare to that direction. You know, the minimum capital used to be about 6 million.
Yes.
It was increased to 60 million. And then after all the banks met it in 2012, a new minimum rate came, about 120 million, which they said that is going to apply to investors who now want to establish
Like the new
the new entrance. Okay, so those who are already in it, it is 100 million. But if you are now coming in, it's 120 million. Who knows? Maybe next time they will say it is now 120 million. And the reason is that they want to help banks to grow so that they'll be able to book big ticket business in the country. Because now Ghana is oil producing country, and we need
I agree, but then the question I ask is, does it have to be a blanket 100 or 120 million on every bank? Can't we segregate the market such that those who want to play in the big markets, they would have a certain minimum requirement? Those who want to serve just the retail market and concentrate or focus on the retail would have a certain minimum. Shouldn't we be looking at that instead of a blanket, either 100 or 120 million for everybody within the industry?
Well, I think it is a good idea, if that is looked at it in that direction. But they are the regulators, and maybe they need to be a consultation. But when this issue came up, they said that we have the banks, we have the non-banking financial institutions, we have savings and loans, we have microfinance. All of them have their minimum. Okay, so if they are referring to the bank. So if you think that you cannot operate as a bank, then you have to you go below where the savings and loans are, and the other people are really operating.
I agree, but look at the situation where somebody wants to do what a bank has a focus on playing big time in the oil industry. Yeah. A bank also says that, look, I want to concentrate on developing the retail market. Those two banks have very totally different objectives and focus. Because of that, in terms of requirements, you are looking at two sets of requirements. You need huge capital to go into the oil industry. But if you're looking at retail, you might not need as much as if you are going to the oil. That is where I'm coming from, that if you look at it that way, I don't think all the banks are interested, for example, in going to the oil. Some might be interested in the mortgage industry, for example. So I look at it that, look, instead of making it blanket on everybody should bring 100 or 120, we should probably consider tiering, even within the same banking industry. Yes, maybe 2 or 3 categories. When you believe that, look, you've done enough of SME market or done enough of retail and want to now go into the oil industry, then you must meet that requirement.
I think it wouldn't be a bad idea at all if they should really look at it. But the thing is that, our recent banking law, they say grants universal banking license. Previously, it wasn't like that. But now, once you register as a bank and you get your license, you have a universal license to do anything that relates to banking. Okay, so that one also puts the regulator in a certain position to ensure that once you have a universal license to do everything, you have to be checked and monitored and make sure that your capital base is at a certain minimum level to protect depositors and then your clients who do business with you. Because, as we speak now, the banking industry has grown. Right now we have about 27 banks. Okay, Bank of Ghana
bank is still very high.
That is very true. Bank of Ghana Financial Stability Report that was released recently indicates that the total assets of banks in Ghana is about 38 billion Ghana cedis. It's about 50% of the GDP of Ghana.
That's true.
Okay, and the liability aspect of the assets is the biggest. So which means that banks have a lot of liabilities on their book, from depositors and then from money they borrowed from other people or institutions to actually invest or to really run their business. So if the liability side is really increasing and then you don't really look at how much the investor have actually put into the company. Okay, it actually brings about a risk issue. So that's why the capital adequacy ratio is always important, to look at the capital of the investors, okay, or the shareholders, as compared to the total assets, okay, of the company, to always make sure that there is a balance, to make sure that in terms of any crisis, depositors will be actually be protected. So I think that it's really something that they should really take into consideration when some of these issues really come up. But at the end of the day, almost all the banks now have the minimum capital requirement of 100 million Ghana cedis, 60 million Ghana cedis.
Yeah.
And the new entrants who are coming, they have also complied with the 120 million. So with UT, I think maybe one reason may be that they are looking in anticipation to that. And then secondly, too, if any time a bank also want to raise capital, either private placement or right issue, it's also that they want to really expand their businesses.
Okay.
And if you look at UT, okay, it's one of the banks which is having problem with high interest expense, okay, which means that their source of money,
It's
okay,
quite high.
it's a very expensive.
It's very expensive,
Okay,
yes.
when they take money from people, the interest they pay is very expensive.
Yeah.
Okay, and that also explains why when they also lend out, it is also expensive. So if you don't have access to cheap source of funding as a bank, then it becomes very difficult for you to make profit. And that is one thing which has actually affected UT. It's one of the banks in the country which has a very high interest expense. But by having access to capital from your own shareholders, you're able to raise cheap money, okay, that you'll be able to lend to people and then make some significant money out of it. So I believe that these two things are really in their mind. Expectation that maybe the minimum capital might be raised to 120. So they have to really prepare in future. And then secondly, the fact that they need cheap source of funding to be able to give out, to their clients to be able to make a lot of money, because their interest expense is very high.
We'll take a quick break. When we come back, we'll go through Nigeria, through Zambia again, and then Egypt. And then we'll wrap up our discussions.
Here are some vacancies at Elmina in the Central Region. Electrical or electronics and process engineer. The purpose for this position is to oversee all activities in the electrical, electronic engineering department, including the strategic planning and implementation of new engineering practices and technologies for effective and efficient use of electricity and machinery to maximize productivity. Your duties and responsibilities will include the following: liaise with ECG on billing and fault issues to ensure good power intake and efficient power usage. Installation of new electrical or electronic equipment and machinery to standard. Planning all electrical maintenance schedules, both breakdown and preventive maintenance, to ensure minimal downtime on extruders, thermoformers, reclaimed shape molding machines, and other production equipment. Programming of AC and DC speed drives, programmable logic controls (PLCs), controllers and other programmable devices on extruders and thermoformers, and liaise with the production department to ensure smooth and efficient operation of machinery, among others. For the qualifications, a candidate must obtain a bachelor's degree in electrical or electronic engineering with a minimum of 10 years working experience. Candidates for the position must have a good educational background and extensive working experience in the polystyrene and or polypropylene manufacturing industry. Send a curriculum vitae to eric.assign@ggfcghana.com for consideration. Job title: Mechanical Engineering Maintenance Manager. The main responsibility is to ensure that mechanically production equipment is in good working condition, which should be able to turn out good products. These include the following duties: mechanical troubleshooting on production equipment, extruders, thermoformers, shape molding machines, compressors, and other equipment. Planning maintenance schedules on production equipment. Planning and supervising machine repairs and modification. Installation of new equipment, and the design and fabrication and repairs of all product molds, among others. For the qualification and experience, candidates for the position must have at least City and Guilds Part 2 in mechanical engineering or its equivalent educational background with a minimum of 15 years working experience as a mechanical engineer with a reputable manufacturing company. The person must be comfortable maintaining air compressors, cooling chiller, cooling tower, high-pressure gas pump, low-pressure gas pumps, steam generation, hydraulics and pneumatics, preparing maintenance budgets, and any other mechanical works. Candidates must also be able to manage at least 10 subordinates. Send a CV to eric.assign@ggfcghana.com. eric.assign@ggfcghana.com.
Welcome back. Let's take a look at what is happening in Egypt. Some very good news. The second quarter 2013-2014 saw a rise in their growth rate to 1.4%. You know, and looking at the conditions that Egypt finds itself in, this seems to be a very positive news coming from Egypt.
Yes, I think so, and I'm very happy for Egypt because we all know what they've been through in the past 3 to 4 years. Okay, when the uprising actually started. Actually, in their last year, 2012-2013 and 1 year, the GDP actually grew by 1.8%. And in the current year, the managers of the economy have actually predicted about a 2.5% growth rate. And the first quarter, the economy grew by 1%. Second quarter, it has grew by 1.4%, an increase of about 0.04%.
Yeah.
If you look at the average, okay, for the half year, it means that it has actually grown for about 1.2%. Okay, and they have targeted 2.5% for the year. So if you analyze it, they are really close to what they really intend to really achieve. And I think that if you look at the policies and the programs on the economic front that they've really put, together, I believe that if they should really follow it, they'll be able to achieve their target, for the year, because there are very positive news in the economic front. There are reports that the external reserve has actually improved to about $18 billion, which is the highest in about 5 years. Okay, and in terms of revenue side, the revenue from the Suez Canal, which is one of the major sources of revenue, okay, is also about to reach about 5.5 billion, which is an all-time high. That is what the authorities are really saying. And there seems to be a lot of money coming from some of their bilateral partners, from the Middle East, Saudi Arabia, United Arab Emirates, and Kuwait. There are reports that they intend to together lend to the government of Egypt about $12 billion. Okay, and aside this, there are also institutions which also want to invest in Egypt. Okay, and they are very positive about that, and they are really pumping a lot of money into Egypt, and that is what has even accounted for the very good performance of the Egyptian stock market, which has made over 20% so far year to date. Okay, so I believe that there are a lot of positive things going on in Egypt economically. The only risk factor has to do with their political climate, okay, political environment, with the leadership, and I believe that they'll be able to put things in order to really ensure that the political front, things are really in order to make sure that the economy pick up to a level, exactly.
They're actually also targeting a budget deficit of between 11 and 12%.
Exactly.
Compared to
the 14%
of the previous year.
Exactly.
So it seems they are really also doing some tight fiscal policies to ensure that they don't overrun their budgets.
Exactly, that's very true. The previous year, the budget deficit was about 14% of GDP.
Yeah.
And in the current year, they are targeting between 11 and 12%. And in the next fiscal year, they're really targeting between 10 and 10.5.
Yeah.
Okay, they really want to really bring it down. So I think that the trajectory is very positive. The only risk factor, as I said earlier on, is the political side of it to work on. Exactly, because after Hosni Mubarak, was ousted, Morsi came. He did not spend, more than 2 years. He also went, and then now there's a new interim leader who is the Al Fattah Sisi, okay, who, from report from Egypt, indicate that there seems to be a lot of people who have confidence in him
to lead their
as
country
to lead their
again,
country
yeah.
because they
Yeah.
believe that he has what it takes to really bring the country back to where they all expect it to be. So they are working on their constitution to make sure that everything in place so that they'll have election to elect a leader to take them through their recovery process.
So hopefully, at least once there's some stability at the political front, we should see some more consolidation
Exactly.
on the economic side of it as well.
Yeah, that's very true.
Okay. If you take Nigeria, there seems to be a split among experts on the use of their reserves, the external reserves, to defend or to shore up the Naira. And there's a discussion that has been ongoing. You have their reserves falling to about 38.13 billion from as high as 48.85 billion. And it seems to be causing quite a bit of headache in Nigeria in a bid to protect the Naira from falling any further. That's what they are doing. What do you think is the best approach?
Actually, I've read, reports from Nigeria, and I've really read about what those who support it, what they say, and those who don't support it, what they say. Those who don't support it are saying that the foreign reserves are falling. Okay, and that is not the best way to do it. So the government should look for an alternative means to really deal with the problem of the depreciation of the Naira. So the question I ask myself is that what is the other option that they are looking for that the government put forward? Okay, because at the end of the day, what is the purpose of foreign reserve? You have the foreign reserve so that when the country is going through some crisis, you can rely on the foreign reserve to deal with the problem. So normally, our central banks rely on foreign reserve, especially in Africa, where we have a lot of depreciation problem because we don't have strong currency and then we import more than we export. So that when the currency is depreciating, you rely on the foreign reserve as a temporary measure to deal with the problem. Okay, so that when things actually recover, you find other alternative ways to build it again. Okay, and that is what is really happening in Nigeria. So those who support it are saying that if you allow the Naira to fall, it will create a lot of uncertainty in the market. If you have a currency which falls beyond a certain limit, it actually creates panic. And it reduces confidence in the economy. So there's always the cost of actually defending the Naira, okay, will be much lesser. No, the cost of defending it by relying on the
external reserves.
It's lesser than
the impact is lesser
than maybe devaluing it, because those who are even saying, other people are saying that they should try and then devalue the Naira. And some of them are saying that even if you devalue the Naira, the cost will be higher than allowing it and then allowing the central bank to actually intervene to make sure that they stabilize it. And I believe that it is, to me, I think that it is good for them to rely on the foreign reserve, because that is what reserves are meant to be. It is a reserve. When you are going through challenges, you rely on it, especially when the challenge is a temporary challenge. And then when things really improve, you build the reserve back, confidence return in the economy, and then things really begin to go on normally. Okay, and that the reason why some of the reserves is also going down is that we know Nigeria is an oil exporting economy. 95% of their foreign exchange is from oil. Okay, so when in a situation where the oil price goes down, it affects their reserve. Okay, but prices don't go down forever.
That's true.
Definitely, a time will come when the economy will. So when the price of oil begin to go up and things really improve, they will be able to build the reserve back. Okay, and then move on. So I am really for those who say that the central bank should stay in the market to make sure that they control the currency within a certain limit. Because as I said earlier on, if you allow your currency to depreciate beyond a certain limit, it creates a lot of panic and instability, and investors lose confidence, in your economy, and it creates more problem. And the cost will be too higher than you can really bear. So it's good for some of these things to be discussed. I think the central bank, committee, is today they are in their second day of meeting. Exactly. So after the meeting, they will announce policies, in direction to, how they expect the economy to be. So
actually, just if veering off into that sector, Some analysts are also anticipating that the central banks will draw quite a lot of money from the banks. You know, that there are some deposits that they have with the bank that they seem to withdraw, that they are anticipating that the central bank will draw from these banks. What will be the implication of some of these measures on their economy?
Yeah, I think that it's also one of the measures to deal with the problem of the depreciation of the naira. Because when your currency begins to fall, there are a number of, strategies that you need to put in place to really deal with it. So I think that by relying on the reserve, it's not the only strategy they are using. This is also another strategy. When there's so much money in the economy, okay, it has effect on inflation. You understand? So one of the policies to deal with this is to try to increase the policy rate.
Yes.
To really reduce the money in the hands of the people, so that people will encourage people to really invest. And by even raising the policy rate, interest rate also goes up. You encourage foreigners to bring in more money, so you got more revenue or foreign exchange to also support your currency. And then thirdly, you also prevent government banks to really give out more loan. Okay, that's why we have the cash reserve ratio.
Yes.
Okay, where you actually limit the amount of money that banks can really give out. When somebody comes and deposits money in your bank, there's a limit that you are supposed to keep with the central bank, and then you will really be able to lend the rest. Okay, so when they increase the reserve ratio, it actually limits the ability of banks to lend more by pushing more money into the economy. And by withdrawing money from the bank, where central bank or public institutions have money with the bank, and they withdraw it, they also reduce the ability of banks to really lend more money to the public to really, cause a lot of inflation in the system. So I think that these are all policy options that analysts are really looking at in Nigeria with regards to the meeting that the committee is actually having. And these are some of the options that they expect that at the end of their meeting, they will come up with some of these strategies to help, or in a way to deal with the currency problem that they are facing.
Would you anticipate a devaluing of the naira in the face of the pressure on the foreign exchange as well as the hemorrhaging of the external reserves? Do you think that could possibly push for a devaluing of the naira by the central bank?
I actually read one analyst comment who said that, in our part of the world, we don't have comparative advantage when it comes to international trade. So, under normal circumstances, every economy, if you devalue your currency, it makes your goods cheaper. So you are supposed to export more. That's the benefit of it. But in a situation where you don't have a comparative advantage, that when you even devalue your currency, you even import more. So it gives you the reverse effect. Instead of getting the benefit of devaluation by encouraging a lot of export for you to get more revenue, in our part of the world, whenever we devalue our currency, we get the reverse implication.
You have more imports.
Exactly. So that is why the analyst said that the cost of devaluation will be more than the cost of relying on the external reserve to defend the naira. And that is why I really side with him. And I believe that the depreciation of the naira is not going to be forever. It's a temporary something that will come and then end.
Let's take our final bit on the kwacha in Zambia that is gaining as a result of the scrapping of those foreign exchange laws recently. Do you think this is sustainable, really?
Actually, it will also depend on a number of other factors that the authorities will put in place to deal with the problem. Because normally when there is a problem, there isn't only one solution.
Okay.
You have to tackle it from multifacets, or different angles. Okay. So only by scrapping it, I don't think that is a guarantee that the problem is solved. Because you and I know that when it comes to Africa, one of our biggest problems when it comes to the devaluation of our currency is that the economy is fundamentally
import dependent.
the structure of the economy is problematic. Okay, so any measure that the central government will take is temporal. You cannot use monetary policy to deal with fiscal policy. You use monetary policy to deal with monetary issues, and then fiscal policy to deal with fiscal issues. Okay, so there's an extent to which a monetary policy can deal with a problem such as what, devaluation or depreciation of your currency. So whether it's going to be sustainable, I think that it will depend on other measures that the authorities will put in place to deal with the problem. But if they decide that this is going to be solve the whole problem, I think that then they will get back into the problem. Because we know Zambia is one of the leading exporters of copper. Okay, and copper prices have not been doing well. So they have a shortfall in revenue.
That's true.
You understand? Yeah. So these are some of the problems which is also, affecting them, and that is why the kwacha has actually come down by about 10%, so far. Okay. So aside this monetary policy issue to deal with the problem, they need to also address the fundamental economic problem that all African countries are facing when it comes to the issue of the performance of our currency against the major currencies we have.
There's actually the real need for countries to look at, especially for us, in the African continent, to do a lot more of the exports than we do currently, and to encourage a lot more local consumption of local produce than what we currently do. Charles, thanks a lot once again for this morning, for joining us on the show. So that is it for today. So keep watching BTA. We'll be with you tomorrow morning on Business Africa Live. I've been your host, Benjamin Afre.